really solid quarter for them, Alex, and this is a really strong start for them for fiscal 2025. So, the big numbers, of course, that we constantly look for when Disney reports is how did it do on the streaming subscriber front? And we did expect them to lose a good amount of subscribers, just kind of given the price increases that went in effect late last year, almost 15 to 25% price increases. But churn was very, very limited. So came in much better than they had expected, than we had expected. And then again, the parks numbers. Now, remember, we have been seeing some demand moderation at the parks, but they actually, again, held up better than expected. So all of those, you put all of that together, including streaming profits, you had over a 40% increase in adjusted EPS. So financially, I think the company is off on a solid footing and off to a very good start for 2025.
What could be a less than positive view of this quarter here? Because I'm seeing the stock kind of all over the place. Geeth, it seems like maybe the market can't really decide. So what are some of the concerns out there maybe from this quarter?
I think what was slightly disappointing, Paul, is that they didn't raise guidance. So,
Okay.
they did deliver 40% increase in EPS, but they're still talking about full year EPS only growing in the high single digits. I think that's where maybe the market is slightly disappointed. Again, with the parks also, they didn't necessarily raise guidance. And remember, with the parks, there is a little bit of concern about what competition can potentially do when a new theme park from Comcast, NBC, Epic Universe opens this May. And there's still really conflicting views about this, although management seems to think that it's kind of this rising tide that lifts all boats. So they've downplayed it, but I think there is still some concern about that. And then the other big thing that everyone's kind of looking at or waiting for is the launch of what they call flagship ESPN, which is the first time that ESPN, the full-blown product, will be available without a pay TV subscription. So that's going to happen sometime in the fall of this year. And so again, there are going to be some launch costs, where that product prices, what the subscriber outlook will be. So a little bit of uncertainty there as well, but overall, really, really strong results.
And the streaming operation and film studio looking at like a 31% gain in operating income for the quarter. Was that really driven by price hikes for streaming?
For streaming, yes, a lot of it was driven by, we saw really solid ARPU growth. What we're going to continue to see, Alex, through the rest of the quarters is exactly what Netflix did. Disney's kind of taking a page out of that Netflix playbook with what they call page sharing, or cracking down on password sharing. And so we're going to see that kind of really ramp up in terms of the streaming profitability numbers. And then you pointed to, content. The box office has absolutely had a marvelous run, kind of reversing so many of, the misfires that we had in earlier years. And they're going to continue to build on that. And as some of those movies come on to the streaming platform, again, they expect that to drive subscriber growth as well.
So, Geeth, what's the market thinking about profitability for streaming at Disney? We kind of, you look at the Netflix margins, and is there a belief that Disney can at least approach the Netflix profitability?
Absolutely, I think so. I don't think it's going to be immediate though, Paul. I mean, so for this year, they are guiding to about $1 billion in profit. They did say that they will get to double-digit margins in fiscal 2026. Now, remember, Netflix is already close to 30% margins. So, you still do have that big delta, 10% versus 30%. But I think that's where all of the upside really is with Disney. I mean, this is a complex story with many, many different moving parts. But streaming is obviously one of the, huge positive catalysts. And I think we're going to see that streaming profitability continue to build, especially as they have a lot of pricing power and all of these other different initiatives. And remember, for them, as opposed to Netflix, one area where Disney is better than Netflix is advertising. They've got all of those different, all of the plumbing is in place. They are the biggest digital advertiser right now out there in the market. They make even more in connected TV advertising than YouTube does. So, they obviously have, an advantage, a first mover advantage, I would say, with respect to advertising.